Welcome traders. So 3 questions this week. Is inflation cooling globally? Where's the danger coming from this coming week in terms of news, anything else? And then should you sell in May and go away? Okay, so let's have a look at the economic calendar for the week ahead. Essentially, there aren't any real problems, despite, you might think so from the media. Yes, there's this fear of the US defaulting. Now, I need to kind of talk about this very quickly. It is my personal opinion that they won't default. Does that mean that they can't? Well, no, of course they would. It would be unprecedented. It would be insane. It is absolutely a choice not to default on it, so it doesn't have to. So it doesn't have to happen. So if it does happen, it would be an active sabotage of the U.S. economy. That's a fact. And so I don't think it's going to happen. I really don't. I can't see that. I can't see it happening. It would just destabilize everything. It would be as dramatic as Putin invading Russia. So I can't see it happening. So I'm just going to plant my flag and go, boom, it's not going to happen. All right. Anyway, so that being said, that aside and all the fear around it, I think that this week, there's not a lot really worried about. Inflation does appear to be cooling. And I'm not the only person saying this, the people that I trust in terms of phenomenal fundamental analysts are of the opinion that inflation right now, a lot of that is stemming from corporate profits, where they're refusing to kind of bring their costs down. A lot of people saved up money during COVID. Now you can see in the last year, people are traveling, people are spending the money, and corporations are definitely taking advantage of that, especially airlines. I mean, that's just one example, but everybody else as well. So it is a big part of that. And eventually when people's savings that they've accumulated over the last couple of years runs out, and then there really is a cutback on that, you'll see the last response to that will be the corporates starting to cut down those costs. So in principle, most things look economically stable. And if they're unstable, it's really not because they have to be unstable. They're basically being pressured where they don't need to be. Anyway, that being said, I'm going to be focusing on some US news this week. I mean, there's some good stuff out of CAD. So there'll be CPI data that'll come out from Canada. There's some core retail sales, keeping an eye on that, but it's just not as heavy as I would have said a month ago. I'm not really concerned about it. I'd watch a few of the others. So there'd have to be a shock thing. There'd have to be a significant surprise drop in any of the data that we get out with there's jobs, suddenly unemployment spikes, or something else happens. But for the most part, the central banks are communicating what their intentions are well ahead of time. And I think with the US, for example, I think it's very important, and I'll be in the minority of this, but I'm of the opinion that the goal is to try to get people used to, and the economy used to, higher interest rates in the way that it used to be in the 90s. And we have to do that slowly but surely, but the goal is to do that. And the goal is absolutely not to go back to lower interest rates in the way. So yes, there might be some quantitative easing, or there might be some other, or they might reduce the rate hikes as opposed to hiking the rates. They might reduce them, but it's going to be small amounts, and the goal is to stop at some point. So it's a last resort, and I really think there is an attempt to change the way that we see interest rates for the next 20 years, for a long period going forwards. And so that's anyway. So that being said, let's go to the charts and have a look at what's going on there. And if we have a look at so here we are looking at volatility, it's right down near the lows. Okay, so you'll see this is COVID. We'll go back to that. That's COVID. And we can see other previous spikes here. You can see 2008 global financial crisis. We're sitting at these lows, which is where we should be. We should be hovering around this area when there's not a lot of fear in the markets. And we don't have to have fear to make money. We can have greed. There are different things that can drive the markets. But right now, the point is that the market is not on tenterhooks. So if you're hearing somewhere that the market is about to collapse and there's all this potential drama, we will see it start to rise if that's going to be the case. And we really haven't seen anything yet. So no. Dollar index. So looking at the dollar index, this is significant. We've broken out of this range. We're ping-ponging around here. We've broken to the upside. We've got that stronger dollar. When we look at it from a monthly perspective, we had a big move up through 2022, 2023. We've seen it come back. There was an attempt to move higher. It's now moved across, and if this closes as a bullish candle, then this would be, I would constitute this as a double bottom. So I put that in, that nice little bullish candle there and another bullish candle here, and then that would, especially if we break this high, that would automatically to me imply we're going to head back up to here. I'm not seeing much more of that at the moment, other than the fact that this has kind of been consolidating and now it's looking to kind of break up. So for this week, I would expect this to now attempt to continue to rise. You can see that MACD is trying to move across above that zero line. So yeah, I think it's fair to say that we could see more of, we could see that dollar strengthen. And therefore, I would see euro dollar start to move down. You can see it's still in an uptrend here, but it could find that it could this week. Well, let's see how this week goes, whether we get a nice bullish candle by the end of the week. But I'm going to be positioning myself more looking for dollar strength and therefore looking for possible shorting opportunities on the euro and the pound. Okay, the same here. Again, you can see we've got a very nice uptrend and we're coming back into a level of resistance that could be support. And so price could come down a bit and then close a little bit higher, giving us a bullish candle for the following week. At the same time, when I look at the bigger picture here, we've had a really solid retracement. We're in a good area here where if we form a bearish candle here, we could resume that. So it's going to, so shorter term, and when I say shorter term, literally just for this coming week, I'm just going to play it as it lies and just see how the market responds to these levels. Do we go far below these levels here? Or do we tend to, find and then rebound a bit throughout the week? But there isn't any news that I think the market is waiting for that it's going to change its opinion on anything. So I'm probably just going to spend some time on that Aussie dollar as well. You can see very much range bound stuck between these highs here, these lows here. I expect this at the very least to go back down towards these lows. I think that's a fair assessment of the situation. And again, here you can see very much range bound. Attempt to break out of that and then comes back within that range. And it still looks relatively bearish on the monthly. So Aussie dollar there. And some of the weaker ones would be great for that. Kiwi dollar here, you could say it took a bit of a hit. Looks very sort of exhausted on that. And a break below this would see it accelerate to the downside. We're not there yet. Just highlighting that it's very much range bound. If you've had a bit of a spotty week, I did. In terms of trading, I had, interestingly, and I had a larger than average losing week. Usually if I'm down 1% or 1.5%, but this week I think I was down like 4 or 5%, like quite a substantial amount. And there was no emotional trading. I look back, I'm pretty happy with all the trades I took. There was just a lot of swinging around where trends that have been in place either decided they were going to start a new trend and then reversed on that, or just reversed on an existing trend. It was just all over the place. So this week I'm looking for some of that clarity. Hopefully I'm looking to see some of that change, but I'll be looking for more of that. Again, here, this is beautiful. We've got a bit of a double bottom here. On dollar yen, it's broken the high, so we have a confirmed uptrend. I like the look of that. And that also supports the idea here of a bit of a potential bullish breakout building up here. So the level that I'm going to be looking for, that I'll be watching, will be just off the highs here, looking for a break above that, because that should then see it start to consolidate just below that level, then ultimately break out above it. So actually that 136.60 looks pretty good to me. Moving on and having a look at dollar Swissy, you can see it's overextended to the downside. It's trying to trigger a move, so it's very feasible to me here to see this move up to 0.9, probably 0.91. Okay, this is a nice little potential. We had some beautiful potential setups here, and this looks nice and bullish. There's a lot here that's cluing in, but it has to break above these levels of resistance and then continue to move higher. Dollar CAD also just trying to stay above this level, producing very nice bullish candles. These bullish candles are worth taking note, because when you see this kind of thing, especially when we see a series of them in a row, they are generally producing sort of double bottom type, triple bottom patterns, which are likely to see the market actually head off higher. Okay, so what's going on with the ruble? Nothing, just continues to trickle to the upside. So there's obviously some trade happening on that. And before we go any further, let's have a look at the let's go through and have a look at my at the indexes. So we'll start off with the Euro index, see if it's generally bullish or bearish. Go through, pull that aside, and you can see here on the weekly, bit of a retracement. We could see it find support. If it finishes up with a nice bullish candle this week, then we could see the euro continue to strengthen. So is it possible to have a strong US dollar, a strong pound, a strong euro at the same time? It is. It's really about kind of which one is the leader in that case. So it is possible we could continue to see the euro strengthen even though it's weakening against the US dollar. Okay, it's very important to kind of assess that that is a possibility. We look at sterling. Sterling's also still potentially coming down. So this week, I mean, you look on the daily, we've got a bit of a downtrend, but we could find a double bottom here and then start to head higher from that. And then we've got, let's look at the Australian dollar as well. Okay, this one's just very, very choppy. So although it might be weak when we look at it on the main one, it's not offering a lot of clarity right now on that. We've got the Canadian dollar as well, which is just battling with this level over here, but climbing to the upside here at a bit of divergence. Okay, so again, what does that tell me? It tells me the Canadian dollar is going to be a mixed bag. I should definitely only trade the strongest signals on that, or the strongest trends on the crosses of that. And then finally, let's just have a look at the Japanese yen. It's generally climbing higher. You can see here, that's definitely produced a nice level of resistance, finding some support here. And so we could find indeed that that starts to increase in strength. So, okay, cool. That just gives me a bit of a better perception of what else is going on there. Let's have a look at gold. So gold for me, again, please understand that most of this is subjective. I'm quite happy to get other people's input, your opinion on this. It's not a question of lack of faith in my own analysis. It's just that I'm always happy to see someone say, have you looked at it from this perspective? So here we've got a lower high. Overall, we are in the danger zone. I'm going to call it that because until it breaks through, it's at all-time highs. And you can see how on the monthly, the wicks have started to come in here, which just signifies exhaustion and sort of a little bit of failure there. And so it all really depends on how the month closes. If we close near the highs, we are closing a little bit higher each month so far. So it is creeping higher, but there's a lot of sellers in here that are, and a lot of people taking profit. So there's just not enough momentum at this time to continue to push it higher. Here you can see we've got a bit of a weekly indecision candle. And so we could see a break of the low that would see gold starting to head low. We've definitely got bearish divergence here. We've got rejection candles there. There's a lot of evidence that kind of points to it wanting to go a bit low. We move across to silver and you can see a bit of a, not a bit, a big drop here. Looking at it from a monthly perspective, it's back into the area, into these moving averages here. Momentum isn't so bad here. So actually we could see a strong bullish weekly candle here, see it push or indicate that it wants to go back up to the highs. On the monthly, we've just got very similar candles here, bullish candle here, sort of, I'm going to call it bullish indecision, and we've got a bearish candle here. So a lot of this also implying, and we had a similar move here. We had a bearish candle to the downside, bullish to the upside, then we had a bullish move here and a bearish move here. So all of this indicating indecision. And that brings me to one of the points I highlighted at the start of today's video, which is, should we sell in May and go away? We can have a look at the stocks and see how they go, but yes, it is possible. There's a bit of a lag. So for you folks living in the southern hemisphere, so that's Australia, South Africa, New Zealand, there is something that happens in the northern hemisphere without a doubt. Once you hit kind of May, you start getting into summer in the UK, absolutely, in Europe, which is very close by, and then potentially in the US as well. You get school holidays, and school holidays start to come up, and then the parents aren't ready, they start to take their holidays as well. Always blew my mind when I moved to the UK that we'd finally have summer in London and everyone's gone off on holiday. They're not even here to enjoy it. But that's just the way it is. School holidays usually result in people traveling, and they're not at their desks, which often results in just lower volatility and less, like the markets can get very sluggish. And that is often the case. However, that being said, so I'd keep that in mind. That being said, there could be a trend. There could be something that's moving. You could see crude oils moving for other reasons. My point is that if you're not feeling the momentum, if you're not feeling the energy in the market, then it probably isn't there. And it often happens. It's not guaranteed, but it often happens. And so I say that because, for people in the southern hemisphere, this is just not a thing. It doesn't happen. Okay. Well, no, it doesn't happen to the same degree. Copper. Okay, looking quite bearish here. We've got a solid downtrend on the weekly. Monthly, no clear trend at the moment. Coming down to the 50, I'm sure we'll get a bounce off that 50. We've got a daily downtrend as well. So I expect this to attempt to continue. I would say any kind of pullbacks into this area could provide some shorting opportunities this week. Natural gas, I'm still waiting for this to turn around. It's showing here potential here for a slightly higher low. So we'll see. I've highlighted this green area plus this bullish MACD, plus the kind of shift in the momentum here from bigger candles to smaller candles. I'm looking to see, and again, this is just this is a higher risk, higher reward type of setup where I'm looking to see this expand to the upside. And that's what the green box is there for. Crude oils. Crude oils did a very nice kind of pullback. This is a very standard, very clean trend pulling back up into this bearish inside candles. Looks very much at this time like it's going to go down. Okay, so I was also going to say that when we get a candle like this, which has a small wick, it's not even maybe I'll be kind of generous and say it's 50% of the body of this. Often the follow through or the following candle will more often than not just follow through and keep going. So the momentum at this time to me on both crude oil and Brent oil looks bearish. My expectation is to see a continuation to the downside. I'm very aware, I can see this now, I'm very aware of what Brent crude is, these levels here, so I would certainly make sure I've got some profit ahead of these levels, but I think the momentum is more bearish than bullish. Okay, wheat is attempting to turn around, but there's not a lot happening here, so it may just ultimately continue, just keeping an eye on these. Nope, a little bit more bullish divergence there. So it's possibly going to be a little bit more choppy. What does coffee say? So coffee is also testing support here. So again, it's more bearish when you look at it from a monthly perspective. We've come back up here. We're really battling in this area. It might just ultimately continue there. It's actually stuck between the shorter term moving averages and the medium term moving averages, ping-ponging around that. Then we have a look at sugar. So sugar, obviously big move here, not really doing a lot throughout May, not doing a lot. Double top, let's call it, let's put that in. So there's a double top here. We've got bearish divergence. My expectation here is that we're likely, it's overextended here. We've got an indecision hanging man candle. All of that just really means usually are signals of running out of steam. My expectation would be that this is going to have a correction at some point, whether it's this week or in the near future. Likely to see a correction back down to say $24, and therefore that's what I'd look for this week. Possibly some little kind of setups here where we look for a break below this and a short-term downtrend back into these areas. So it could be some good stuff for day traders. Cotton, largely going sideways, man. That's garbage. So when I say garbage, it just means it's not of any use to anyone. Having said that, options traders, you know who you are. If you're options trading, this is fantastic. It's not going anywhere at this point in time. You could look for an iron condor or any kind of a straddle trade, anything that you're interested in that might find that while this is going nowhere, you could make some money on that. Okay, on to the global indices, starting off with the US indices. We've got a bearish engulfing candle. It's bigger than last month. Okay, the high and the low are outside and above and below last month's range. It's creeping low. So look how the close is dropping down. So we've got some wicks here, but the close is dropping down. These levels have to be tested, but yeah, this would imply that we, at some point, we break that, we're going to see that move lower. So I'd be prepared for that. Looking at the S&P sideways, and actually, when you pay attention on the weekly, and this is for most people who go, look, I trade on the 15 minutes or the 1 hour and the 4 hours, so why would I need to look at the weekly? The point of this is we can see the last 6 weeks, we've stayed within a range. It's just something to be aware of, and those levels above and below are something worthwhile. On the monthly, it looks as though it's building up to a bullish breakout. This is important because it does look indeed like it's building up to a bullish breakout, but the weekly is not offering a lot. So where it gets magical is if we break the high. So if I do see the price is going to start to head up towards these highs, to me that looks good. If we break above these, I think it's reasonable to expect that the market will accelerate once it gets above those levels. Okay, Nasdaq. Nasdaq has been it's doing fine. It was the one that took the biggest hit. Looks really good to me. I really like all of this. And so far, it's closed outside of that range. It's a bit of an indecision candle spinning top, but it has closed outside of that. So what I want to see this week is a continuation of that. In fact, if I look at the MACD now, it's starting to trend bullish. And this is trending bullish. And this is right on that line there. For the most part, it's weak bullish. Let's call it weak bullish, but I like that. So if that does surge to the upside, it's not impossible. Don't underestimate the US indices. They look a bit weak at the moment, but it's one of those things where they could be on the mat and then come up and knock you out. So let's see how that goes. Mini Russell, not the strongest of the bunch. Definitely creeping lower to test this level of support. So similar to the Dow, actually looking questionable is the word I would use. And then here you can see we've got, I'm going to put this in on the FTSE. We're right at all-time highs, but I want to see what happens here. And again, we saw something in recent, I think it was one of the stocks, I'm not sure which one offhand, we had these lower highs, and ultimately it will, when it comes up, I'll point it out, we broke low. So we might come back down and test these levels of support and then push up through that. But we, overall, most things are not looking terrible. And most people are, you may or may not be seeing it in some of the social media or some of the emails or some of the forums you follow, but they're, talking about just a fear of, there's always going to be that fear of the sky's going to fall, but there's just not, and so it's not something we're not aware of. And most people who know what they're doing are aware of all the different concerns, but for the most part, the market should be okay. They often do that. They'll say, well, the Fed doesn't know this, they're not paying attention to this, or they're ignoring it. but the reality is that they are usually very aware of it. Certainly now, the markets are still extra wary post 2007, 2009. I feel very sorry for Gen Z because they're kind of like, well, this is my third global financial crisis in my lifetime and it's a bit crazy, so on and so forth. But for the most part, the best thing to do is just to keep powering forward, and to allow some credit that the markets will figure themselves out. The world isn't about the stock markets. Stock markets is just a market within the world we live in. It's just another thing, and people start to think it's the be-all and end-all. It's not. It's a great money-making opportunity, and that's the point here. So again, I want you to just see here the last sort of 5 or 6 weeks, we've just kind of stayed in this area. When you compare that, you get big moves here, smaller moves here, especially the highs and the closes don't change much. So that's either the market consolidating or potentially it's topping out. Okay, so I'm not seeing massive bearish divergence here, but that could be something we see. And so the clue is there, if it breaks a key level, breaks below that, then it's likely to move down. So now we see a nice pullback. We look at ASX out of Australia, nice little move here, and it did nothing for the rest of the week. Little inside candle here. There's just not a lot going on. So last week for me was just a very meh. It was just not a great week. Anyway, so we've got the Nikkei here looking fantastic. So why I want to bring this up is you may not have seen this because I might have deleted it during the week, but it was stuck within this orange box. It was stuck within that. It's broken out of it and beautifully. It's closed right at the highs. And it wouldn't be doing that if the markets were weak. So we've got UK, the UK, which a UK economy is not great compared to, let's just say the G9. Look at the G9 or the G7. UK economy is really not in the shape it's supposed to be. It's not leading in any way. And hopefully that'll change. I think that we'll see some changes in the next couple of years. Point is, we wouldn't be seeing this in the UK. Also, the stock market, the FTSE's been it's performing at its best in the last 20, 30 years. So we're definitely seeing bullishness where we wouldn't ordinarily be seeing it, and therefore I think that's a good sign. Okay, let's move on to Apple. So Apple looks great, but you must understand that as markets approach, especially the bigger they are, so Apple's big, obviously, if not one of the biggest, when they approach old highs, after having had a massive correction, a recession / bear market, all kinds of things, they tend to take profits and they will slow down. They cautiously approach this level because they're trying to decide if they're just, they had a correction and they're just going back up to it, or are they, are we back in a new bull market, which is what I spoke about last week. So here, for the most part, I'm expecting Apple to test this level and then hopefully continue to break through it. Will it break through this week? No, I can't say that for sure. I can't see that. I can play it as it lies, meaning that in real time, as it unfolds, I can start to see that. What I'm saying is that I understand that where the line in the sand is, where we are right now, is very important. We've seen 5 or 6 here. Look at this, 6 days, no real change. But looking at the weekly in isolation, if I take away the lines, this is beautiful. It's beautiful. It's very nice and healthy. And therefore, it should continue to push up. So it's important to obviously look with the levels and without the levels. Amazon, fantastic. Some really nice recovery here. It's not super strong, but I can tell you this. It's getting back up from the mat. That was a nice, decent close. So far, I would expect Apple to keep going this week. So there might be some retracements, and then they keep going. AT&T is very much battling. It still can't get past this area, so I'm just going to extend that. It just can't get past it, and it's very much range bound. And when you look at it over its history, this implies that there are, instead of it being with the government where you get policies, these would be sort of corporate strategies. Whatever they've got going on at the moment just doesn't appear to be working for them. ARK Innovation is the one that I find interesting. I saw this nice little bullish candle last week, and then we pushed a bit higher. We've come back down now. So what does that mean to me? It just tells me that I feel like there's green shoots, but not enough yet. It's not taking off yet, but I'm optimistic. Then I have a look at Glencore. Glencore's now looking, that's almost a weekly downtrend. We haven't broken the low, but it's looking more and more bearish at this point in time. We still have high lows on the monthly, so we're still bullish in that. The 50, 20, and 10 all look good. No real bearish divergence there. So overall, I would expect this to actually turn around, but we'll have to wait a month or two to see that. Tesco, man, just keeps going. So keep in mind that, look at that. That looks really nice and bullish as well. Keep in mind, and you've got some bearish divergence there. So that usually means you're coming to the end of a trend and you're going to see it sort of potentially kind of spaz out of it. What was I going to say here? So, all right, so they look fine. Let's have a look. I'll just keep going, and if I need to come back. And this, to me, is fascinating. If you've been following me for more than a month or two, I've been talking about this head and shoulders pattern that I've been following, and I just find it fascinating that it does appear as though it is unfolding, and it doesn't actually even qualify as a head and shoulders until we break that line. So, but to me, that is nevertheless fascinating that it continues to push lower. There's no real reason in my mind why Amex shouldn't keep going. It should be doing very well, but I find that fascinating. So I'm going to stay bearish on that for now. No real, this is a real hodgepodge. It's what's called I forget now, like a diamond pattern. So it goes wider here and then narrower here. And it just doesn't really know what it wants. So we'll see. But you look at it from a monthly perspective, it's in an uptrend. So it should continue to go high. Plus, it's Berkshire Hathaway. If there's one person on this planet I would take financial advice from, obviously it would be Warren Buffett. If I had to choose between taking advice from Buffett and advice from Elon Musk wouldn't even qualify. It would be Warren Buffett always, 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 always. Buffett is an amateur. He doesn't know what he's doing compared to that. He doesn't. He's very cutting edge. Absolutely, he gets credit for just breaking boundaries, but he's not an investor. It's not his thing. He's a creator, and Buffett's not a creator. So they have their pros and cons, but let's just not confuse their contributions to the planet and their contributions over here. Coca-Cola, that's great. This is a beautiful signal over here. I really like it. It's quite nice and bullish. That's really nice and bullish. It's at all-time highs. Let's look. This is a bull flag, potentially a bull flag. So what do I mean by bull flag? I'm just going to draw a chart that you'd have a section like that, and you'd have a section like that, and then you'd break out to the upside. It looks good, but I respect the fact that it's at an all-time level, so we'll see how that goes. Let's go on to BP. So, to me, similar to crude oil, looking bearish. Look, obviously, what I mean by that is, rationally, there should be a correlation between oil companies and the oil price. Not highly correlated, but enough. Look, we've got a bit of a double top here, bearish divergence. We've got bearish signals on crude oil. So to me, right now, I would expect at least the possibility of BP coming lower down towards these levels here. If we look at ExxonMobil, same thing again, come back down to these levels. So yeah, there could be some, for day traders again, or options traders, depending on which one you're going for, there could be some shorting opportunities this week. General Motors is not looking good. It just continues to keep pushing lower, dropping lower, dropping lower, not looking good. Some little wicks coming in here which weren't there before, so I find that interesting. It means there are some buyers coming in here. They might prop it up, but otherwise not holding much there. Let's go a little bit faster. So we got JP Morgan Chase, doesn't look good here. It's a bit messy, looks weak. Adidas actually looks okay. Considering what we just saw, this isn't so bad. That looks really good. The trajectory is bullish. Let's see if they can get through this week and push a little bit higher. Meta is doing phenomenally well. Okay, despite my previous comments in the past where I've said, look, I don't really get what the metaverse is about. It's not that I'm old. It's just that I kind of, the problem is that if you live in sort of in the heart of technology, you don't understand that 95% of the world doesn't live in that area, which means that people in 95% of the other parts of the planet are really dealing with other real issues other than the fact that they want to construct an entire life inside the metaverse. That's just it. And you must understand, like, that's the case. So when you get an iPhone and all of a sudden they're like, yeah, we can get 6G on it, you're like, well, how many other parts of the planet have 6G? So there's, I understand that forward thinking and forward looking is part of the process, but I've got enough going on in this life. I don't need to go to the metaverse. I'm not sure how you guys feel about that. So that was my pessimism coming from it. But one of the things that I know from real experience, world sort of business side, is that one of the things that Facebook does is phenomenally good with connecting people with customers. All right, so businesses with customers they want to advertise, and that is something they are just like light years ahead of Google and YouTube. Which Google, YouTube, and other businesses as well. So that's something where I think that there's potentially a lot of business and income coming from. It could explain why they're performing really well. They're above that 50-period moving average. They look really good over here. It's the quality of the trend that I like. And so for me, for now, I would expect, aside from pullbacks, I would expect this to maintain its bullishness. Okay, Morgan Stanley. So Morgan Stanley, it looks more and more, looks weaker and weaker. We've got multiple lows below these lows. We've got lower highs. We're looking nice and bearish there. I would expect this. It's testing a level. It's a red level, so it's clearly a significant level because that usually means it's a weekly level. So we'll see how it does. NVIDIA, this is slowing down. You can see it's at a big move up. It needs to have a bit of a correction. Basically, what it's looking for is a bit of a weekly retracement, but it looks really good here. You can see even as we go down here, we've got this high lows here. Although there's this bearish divergence, it's starting to go bullish again. Some caution there, but otherwise it looks okay. So far as I'm running through these, I see that we have some are performing well. It's a mixed bag. Okay, we've got a potential here for a high low. Beautiful with Netflix to start to break through this downward trend line. That's what I've been waiting for a while. I'm just going to kind of move that over here. But it is now ultimately breaking through it, which is hinting at there's more bullishness coming in. So Netflix is doing well. I quite like the look of that. Meta is doing really well. Amazon is doing well. These are all tech companies that just got kicked to the ground. But then you move on to PayPal. PayPal is just tanking the other way. It's just completely going the other way. This is not a good thing. I can just remove this because who cares what that is. And it's just... I just don't even know what to say. So there we go. Completely kind of started to attempt to break this, and it's just tanking. So let's just move on from that. Can't say much there. There's no signs of anything stopping or changing there. Then look at Spotify. Spotify trend looks okay. A little bit of exhaustion coming in here, so it could be. And otherwise, the monthly looks good. So retracements and continuations. Spider also looks good here. Looks really good on the monthly. When I say that, just everything about it looks healthy when you compare it to, it's almost like you could use PayPal as an example of what you don't really want to see in a stock, that like you want to see it go strong. And I use PayPal, so like it hurts me to say that, but what are you going to do? Here, for example, we look at FedEx. There's a really nice uptrend here, bit of a consolidation. That means it was sort of a reluctant correction. You can see on the monthly, it's also had a big move up here. It's bumped into resistance in this area. So it might want to come down a bit and then find support around 209 and then continue on, but it doesn't look terrible. Tesla is still in the danger zone. So basically, I'm not bullish on Tesla till we get above, let's call it the sort of 230 area. I'm not bullish on it until it gets above that. And I'm neutral on it right now until if it breaks below these lows, I become bearish on it, because then it really will break below this, it'll accelerate to the downside. I hope that makes sense. Vanguard, I'm bullish on that. Looks really good. I like it. I'm not super bullish. The weekly has gone from a nice uptrend to sideways. Can't go past this. It's battling past that. But once it breaks above this, it should start to become more and more aggressive. The monthly looks really good though. This little current month not looking great, but it should start to look more and more bullish there, and I expect that to be a bit better. Let's look at bonds. So we look at treasuries, look at the 10-year T-notes. It just can't get past this. And so for now, I'm just going to leave it. It's had a strong downtrend for a very long time, going all the way back to 2020. Can't get past this couple of months of indecision. A lot of that is potentially hinging on the following. These are hypotheticals. The market, there's a lot of people who want the market to go back to being bullish. Therefore, they're not convinced that we need to buy bonds as an alternative to stocks. At the same time, so in other words, basically what's happening is bonds are not really getting a lot of love per se, and they usually get a lot of love when the market's very bearish. Now the world has changed. When you go back to the 80s and 90s, Buffett would talk about, that's it. Your portfolio was stocks and bonds. In a bear market, you'd shift the weighting of your portfolio to bonds, and then with a bull market, you'd shift a bit of not all of it, you'd shift your weighting towards stocks. And right now, what we've seen is, although stocks have had a correction, bonds didn't really get much of a boost. And so what that tells you in one way is that there's no real interest in it. People want to buy stocks; they don't want to buy bonds. And overall, what does that mean? It means that even though we're going through a correction, people are still keen to go back to a bull market. Hopefully that makes sense as well. Again, if you disagree with me or you have you want to add something to that, please do. Okay, so again, we've got the Eurobond not going anywhere, so there's not much happening here. So bonds become very attractive when there's not much else going on, basically. They're great as a form of kind of safe investing. They're just right now, the opinion seems to be globally that you can get better money from stocks than you can get from bonds. Cryptos. Okay, so this is what I found interesting. We had a bit of a downtrend on the daily with cryptos, but you know what? Within the weekly, right now, I know I highlighted that as a bullish candle. We never broke the high. So that can go because we never broke the high, so we didn't follow through on it. But we could still in this area. So I'm going to mark this area to see if we still ultimately get a nice little green candle in this area. And that could signal that we're going to move up, especially if we get one of these highs. We can see that that's going to happen. It's battling. You can see here it's battling with that level. That was support as resistance. This is significant. Why is it significant? Significant is because there's a lot of the people who are passionate about cryptos are either don't have much money or aren't necessarily that passionate about it right now. So there's a lot of uncertainty around it. Once we break above this line, there's going to, I think, it's a personal opinion, be a renewed love of cryptos. And therefore I think we'd see a boost of it. Right now, that's the line in the sand is, well, is it safe to get back in or not? And therefore it stays below that. Ethereum, stuck in the little band of its own. I want to see these move up. There isn't much happening there, but they're definitely operating on their own now. You can see tech stocks are doing okay and cryptos aren't, so they're kind of doing their own thing. It's not a bad thing. Look at this, just straight sideways on Solana, Cardano, just stuck there. So we need to see what's going to happen there. Bingo. Okay, so for the most part, cryptos requires. So I've had a couple of people say to me, "Do you think, it was actually a kid. It was a sort of a friend, a close friend's child, who's now 10, and he's like, oh, do you think cryptos are the way to go?" And I was like, well, from this perspective, I would say you wouldn't touch cryptos right now. You'd wait until they start to break above that level, because then they'll start to pick up momentum. Right now, there's so many other things that provide safety and opportunities. Stocks, I still think, depending on the stocks, are performing well. Trading provides opportunities on some of the currencies, some of the commodities such as gold, and crude oil, various other things as well. But stocks still seem to be, they're still that kind of workhorse. Okay. Anyway, that's it for me. I've run over a bit today, but a little bit more chatty than normal. I'm going to leave you with that, and I wish you nothing but the best this coming week. Any questions or comments, please let me know.